Good afternoon, everyone. This is Neha McCall, and I'm delighted to welcome you to Bridge to India's webinar on 2022, a year in review. As we approach end of the year, it's the perfect time to look back at the progress made in 2022, discuss some key market trends, emerging technologies, new growth opportunities, and most importantly, sector outlook for 2023. And we've got an eminent panel to deliberate on this topic today, and it is my privilege to introduce them to you. We have with us Ms. Shivanand Nimbarkar, MD and CEO of Ayana Renewable Power, Ms. Shilpa Urhekar, National Head of Sterling and Wilson, Mr. Pradeep Kumar, Managing Director at LONGi, Mr. Nalin Kumar Sharma, President Asia, Middle East and Pacific at Ecoppia. Thank you so much for joining us today and taking out time for us. We would like to thank our sponsors, LONGi and Ecoppia, and our event partner, Indo-German Energy Forum, for supporting this webinar. First, we'll play a short video by Ecoppia.
The sun is our most valuable resource. Today's solar sites produce energy at a level never seen before. Their operation relies on an advanced system of automated robotic technology to ensure maximum performance on every level. Yet another significant resource lies beneath the surface: data. A colossal amount of priceless data flows without end. This superconvergence fuels Ecoppia AI, the most powerful management tool for the operation of solar sites. Smart, connected maintenance robots combined with an array of input sources harvest and transfer detailed information in real time, simultaneously creating new connections throughout the site. The AI core collects weather reports from multiple sources, including live updates from nearby connected sites, in order to render and execute an immediate response across all components of the site. Constant panel performance analysis tracks the PID levels with pinpoint accuracy, enabling the detection and resolution of panel disintegration. The Vegetation Prevention Protocol uses comprehensive data analysis to search, diagnose, and deliver the optimal solution. Security breaches activate and alert all systems, ensuring an increased level of site protection and functionality. Deep learning and predictive analysis capabilities not only optimize and prioritize daily operations and maintenance tasks, but also create long-term blueprints for future development and growth, resulting in unprecedented levels of productivity, efficiency, and planning, an unmatched convergence of data and automation. Ecoppia, empowering solar.
Thank you. Coming back to the agenda of the webinar today. Today's webinar will be an hour and 30 minutes long, and we will be taking questions towards the end. Do send in your questions through the chat box located at the bottom right corner of your webinar panel. We will kick off the event with a small presentation by Mr. Vinay Rustagi, Managing Director from Bridge to India, followed by the panel discussion. And with that, that is all from me. Over to you, Vinay.
Thank you, Neha. I hope everybody can hear me. And a very good afternoon to all our panelists, as well as everybody attending the webinar. So what we will do is, just to set the context for the webinar, we'll just very quickly look at some of the key developments during the year. So we start with the capacity addition. No, I think despite there's been a lot of doom and gloom in the year, particularly with BCD and cost increases, etc. But the surprising part is that we are going to have a bumper year in terms of capacity addition. Despite the challenges, 2022 seems like the best year ever. We've already done about 15 gigawatts almost in terms of new capacity, and looks like we'll probably end up the year with about 17 to 17.5 gigawatt, which will be the best year ever. Now, I think that's been mainly because of two reasons. One, there was a lot of modules which were imported before BCD came in towards the end of last year and in Q1 this year, and those modules have been deployed slowly over the last 6 to 9 months. And then second, I think if you see this middle chart, open access, we added almost 3 gigawatts of capacity in the first 9 months. Now that's again a record. There is an increasing amount of uptake of renewables in the corporate sector, which is beginning to become like a major growth driver for the sector on the whole. So these two trends together means that we will have a very good year in terms of new capacity addition so far. Let's move on. So this slide shows over the last 3 years what's been the trend in new tender issuance and auctions. So the year was notable, I would say, not only because we had lots of supply side challenges, but even the demand side, which is basically appetite for renewables from the discoms, was slightly subdued. I think the most notable part was that SECI still has about 6,000 to 7,000 megawatts of auction projects yet to be tied up with discoms, and they have been consciously focusing on tying up those PPAs before coming out with more new auctions. So what you see in the last 3 quarters, there's lots of new tender issuance by states, but the auctions have actually literally dried up. Probably the worst year in the last 5 years in terms of new auctions. Only about 9,000 megawatts of projects getting auctioned, and most of those again by states as against by SECI or other central government entities. This is really, I think, was the highlight of the year. The module prices just kept climbing and climbing up and up and up. They went up from about 27, 28 cents at the beginning of the year to about 30 cents before we saw a gradual decline to about 25 to 26 cents on a FOB basis. And now that the outlook is that the prices will gradually kind of ease off towards the end of the year and middle of next year. But the key point is this: with BCD in place now, ALMM in place now, most developers, we believe, will be looking for domestic modules, and the domestic module supply is still slightly constrained because of lack of capacity, particularly for high efficiency modules. And the domestic module prices are still at about 37 to 38 cents. And that is really a big pain point still for the sector. This is just a look at the auctions during the year. This is, as you can see, most of these auctions basically came from 3 states, Gujarat, Maharashtra, and Madhya Pradesh. And I think while the overall volume was down, but I think hopefully what we can see here is that there has been a slight improvement in the tariffs over the year. And I think the best case in point is Gujarat auctions, where we saw an all-time low of 199 in December 2020. But then over the last 2 years, tariffs have improved, first to about 229 and 230 during the middle of the year. But in the last auction from Gujarat in September, tariffs went up to 249 plus. So overall, it looks like the tariffs are on the way up, and costs hopefully have been on the way down and will stay that way, which does help the sector quite a lot going forward. Very quickly, very busy year on the policy front. I think 2 or 3 main themes on policy. One, there was a very big shift in focus from just procuring as much power at as low cost as possible to make in India. And to that end, BCD and ALMM became applicable from March or April this year. And that really does have a bearing on how much capacity is added going forward, particularly in the short run. And then we also saw a major liberalization of the open access market. Green open access rules came out. 3 or 4 states have already accepted those rules. Transmission connectivity has been eased. ISTS waiver has been extended. to open access projects. And I guess the other notable thing was that finally the government started acting tough on the discoms for late payments to IPPs. The late payment surcharge rules have helped in bringing the dues down, although it remains to be seen what is the long-term picture for discom reforms and discom improving their financial position. So I think with that, with that context, we will now turn over to our panelists. I'll start with you, Shiv. Thank you again for joining us. How was the year for Ayana? We know that you were participating in a few auctions, you won a few projects. Does whatever I said, does that resonate with you? And I think I also want to ask you, many developers we've heard, they've been trying to postpone projects because of the supply chain pressures, project viability being impacted by cost hikes, etc. To what extent, are you seeking scheduled COD extension or delaying projects to make sure that you are not affected by these pressures?
Yeah, thanks, Vinay. So as we all know, industry is going through tough times for this whole of year that we have seen. Prior to that, we had seen COVID for almost 2 years. There we had intervention from the ministry and we got relaxations in terms of timelines, and I think we were able to manage a continuation of the construction of the projects and activities could continue. And thereafter, I think the world saw the geopolitical situation impacting the supply chain, and it still continues to be a little challenging, but we are all hoping things should look better going forward from now. But again, how it pans out, only time will say. As we see what has happened in the last 1 year, we have seen a lot of challenges in terms of various regulatory aspects, in terms of ALMM kicking in, BCD kicking in, and at the same time the commodity cycles taking massive upturn. So all these in effect has impacted the industry in totality and has really brought to a standstill in terms of construction activities at site. Only those projects have actually gone ahead where people have been able to import the modules before the BCD kicked in. So those are the only projects which have got commissioned in this year that we can see. So the other aspect that we really see is, now given all these challenges from the industry body, we did represent to the Honorable Minister and Secretary and SECI and all the related departments. So a couple of requests that have been made, we hope those are going to be considered favorably by the ministry. One is to provide an extension for all the projects. Our request is at least for 2 years, but we hope at least 1 year of extension is granted so that we can, all the projects can, come on stream. This 1 year time should really help in terms of, assuming that a lot of supply chain and other issues additionally get resolved. So that's number one. Number two, the capacity addition in the country in terms of the modules that was expected to come, not just modules, but also cells and associated, supply chain associated with that, those capacities have still not come to the extent that is required. So the other request that we made, and also what is happening is currently the domestic module pricings are not at a level where the tariffs at which the bids have been won can correspond to getting reasonable returns for which the investments are likely to be made. So there's a big gap there, and that also is a matter of concern because domestic manufacturers are at a price point where doesn't support. And also there is not much of competition because there's limited capacity, and with the ALMM restriction, I'm not too sure how the pricing is going to improve. So presenting all these facts, we made a request to the ministry to consider extending the ALMM window at least by a year or two, because even if the PLI scheme, the first one, and the second PLI scheme of 19,500 crores, which is going to be awarded, for those the capacities to come in, the lead times are at least 1.5 to 2 years at least. So that's the kind of a window. If it is allowed, it will accelerate the capacity addition in this country. So that was the other request that has been made. And of late, we have also made a request where there was a regulation available of project imports, which would allow us to register the project and import the materials at a concessional duty. Recently, we have seen withdrawal of the same from the Ministry of Finance. We have made a request and a representation to Ministry from the industry to consider allowing the projects which were won previously when the project import legislation was existing, to allow imports at a concessional rate. So these are highly critical. We are hopeful that ministry should be able to consider these aspects, and assuming these are considered, then we should really see an acceleration in capacity addition, and we should get back to the growth rate that is expected to be able to get to 500 gigawatt by 2030, which is the target that has been set.
Sure, sure. So just to make sure that we get it right, basically you are saying that in the current framework, the projects in pipeline are not viable either because they don't have modules or the prices are too high, and you're waiting for the government to accede to these two requests.
Correct, correct. These are really required for the industry to, to start adding the capacities and to start the construction work. These are highly critical.
Sure. And the curious thing is that I think you had the minister say, at least in press articles, say that yes, the government is unable to giving more time and giving BCD relief as well by way of project imports. But still, there hasn't been any word in the last few months.
Yeah, I mean, we've had a very favorable hearing from the Honorable Minister. We hope the Honorable Minister considers the request and is able to, grant those earlier than later.
Sure. All right. Thanks, Shiv. We'll come back to you. So I will turn to you, Shilpa. Shilpa, thanks for joining us. Just talk to us, Shilpa, how the year has been for Sterling and Wilson. We know that, like in all other businesses, the company has been affected by cost pressures and delays, etc. Are you beginning to see light at the end of the tunnel? And just talk to us a little bit more also about new project wins and completion track record, etc.
Yeah, thank you, Vinay. So thanks for having me here. So I think the response that as EPC we see to the current situation in the market is a little lukewarm. We find that the projects, PPAs which were signed, so you displayed the slide which showed around 10 gigawatt addition in the 9 months that we are today, and we did a little bit of analysis ourselves. Most of those projects are like Mr. Nimbarkar said, those where the modules were already available and could be basically completed because the current ongoing challenges were not being faced by those projects. So that I mean, though it looks a very nice picture of having that 10 gigawatt capacity addition, we have not been seeing much movement in this year. most of the developers are holding their cards very close to the heart, and rightly so, because of the increase in the commodities and the various reasons we all are talking about. And for Sterling Wilson, accordingly, the market, I mean, our response will be how the developers would respond to these changes. So we see that there is a challenge to them, and so the challenge passes on to us. I feel that there has been quite a lot of positive movement on the investment front. There is, we saw EY ranking India as the hottest destination for RE investment, as topping the charts. But so we think that there is no dearth for the investment to come in, but unless the policy framework stabilizes and unless the policies start speaking, supporting the whole environment. So we, for example, we were just understanding the impact of the PLI overall, and then we got this new e-waste policy. So there is a whole dichotomy in the investment versus the implementation of the intent of the government. So that's where I think the uncertainties are starting to hurt the overall solar industry, and for sure the EPC business as well.
Sure. In your business, Shilpa, I mean, of course, everybody has been affected by cost pressures. Are there renegotiations with project developers on contract terms? Are you trying to pass on, renegotiate contracts or pass on the cost increase to the project developers? How's that going? Or is that also in limbo right now, just hoping for more policy clarity and costs to come down?
So Vinay, I mean, obviously the tariffs or the projects where the tariffs were in that crazy range of 1.99 or so cannot, or even slightly better than that, cannot see the light of the day with today's prices that we have to offer as EPC. And for sure, the commodities have started stabilizing. So I would say that that pressure will slowly start easing off. But what remains as the pressure is on the EPC is because of the module, because the module prices keep, there is no respite there. So the expectation is on the EPC business to squeeze the margins and offer better numbers despite of all the other challenges. So we find that that is one of the challenges, but also I would say there is a silver lining to this, Vinay, because this kind of the pressure that we all are in kind of forces innovative concepts. So we are trying to restructure our offerings. We are trying to add few things, de-scope few things, and make it still a viable option, overall a win-win for both the developer and the EPC. So I would say the good part about the whole pressure is that there are innovative structuring that can come up with this.
Yeah. No, that's a good thought, Shilpa. We will definitely want to know more about what you're planning or what are the new kind of initiatives you're working on. But let me, for the time being, go to Pradeep. So Pradeep, I think you've seen the action, as probably as closely as everybody else has seen in terms of how BCD and ALMM have affected the market. But equally, just outside India, we know that LONGi has been very rapidly expanding capacity and also equally shifting to the new N-type in a very significant manner. So just talk to us about developments for LONGi both worldwide and then particularly, what do you see happening in India and how that affects your business?
Okay. Thanks, Vinay. I think it's a wonderful question. First, let me address about what's happening with LONGi worldwide. I mean, so it's been a fantastic time to be in solar, to be very frank, because past 2 or 3 years we have seen rapid growths, increase in capacities, new technologies being rolled out, and the solar industry has been growing across the globe and giving good amount of profits, which is all-time high for all the say module or any manufacturer across the globe. Now, at the same time, what we need to understand is the demand side will continue to drive the solar market for the next few years, and we are also trying to catch up on the demand globally in terms of expanding our capacities. We were at around 65 gigawatt of capacity in terms of modules by mid of this year. Now we are touching almost 80 gigawatts. Even wafers, we had crossed 105 gigawatt of capacity last year itself. So there's been a lot of expansion which is happening, anticipating that the globe is moving towards a green energy kind of a concept on a very massive scale, and this is continuing to improve. But specifically for India, I think as everyone is mentioning, for like 7 to 8 months now, there has been completely a kind of a break which has happened. Things have started well in the beginning of 2020. We started picking up our business with the mono technology being accepted in India. 2021 was excellent. We had done almost like 4.9 gigawatt of business for India itself. 2022, in the beginning itself, we could do around 1.8 gigawatt in the initial 2 months before the implementation of BCD. But then, if you ask me, in the past 7 8 months, we have done nothing. So, to be very frank, for us specifically in India, I think we are just anticipating some good uh, uh, policy changes or probably acceptance, because what we have seen is the kind of ambitions what we have towards achieving green energy. I think uh, both the domestic and international players will have equal opportunities to prove their existence, to prove their capacities, or even support the government's mission. Because if we do need to do around 25 to 30 gigawatt per annum for the next 7 or 8 years to achieve our goal, now I don't think that's possible if we are dependent just with domestic or even just with international capacities. It has to be together. So, as you asked, are we looking at a kind of a light at the end of the tunnel? Yes, we are all awaiting on that. But unfortunately, past 5 6 months, what's happening is we are realizing that that light is coming out of fire at the middle of the tunnel. So we keep moving forward with the anticipation of a good light, but by the end we say that that's something coming out of a fire. So we just hope that the light will be in future. I think that will be good for us. We're just waiting for that.
Thank you, Pradeep. Any word on getting ALMM approvals? Again, I know that the ministry was sympathetic to the idea, and the foreign manufacturers have been pushing for ALMM approval. Any word on that?
To be very frank, there is no positive things happening in ALMM, because we were the first one to apply for ALMM for our entire capacity in April 2020 itself, which is almost like 2.5 years now. So after that, if you ask me what is the progress, I mean, there is no progress at all. We have done all the documentations, all the payments have been done, everything has been done, but technically we don't have any kind of a progress, because currently, due to geopolitical issues or maybe because of COVID, whatever it seems to be, I think there is no clear path for visas between these two countries, especially China and India, and that's creating some kind of a trouble, because as a mandate they need to do the factory inspections where we have applied for ALMM. That's not happening. So there is an anticipation probably for another 1 year we might get some extensions, but there is no clear guideline on when the inspections will happen, or whether there will be a kind of a provisional approval for the people who have applied for ALMM. So many questions are there, but there is no clarity on that yet. So we're just hoping everything. I mean, we are ready. We are keeping all the books open. We're ready to assist with documentations or with factory inspections. Just waiting for the further steps from the government.
Sure, Pradeep. Thanks for that update.
Yeah.
I will turn to Nalin now. Nalin, obviously, everybody feeling the pinch and a lot of pressure across the whole value chain. How has the year been for Ecoppia? I know that robotic cleaning has become almost like a essential product for most solar projects in India. Has that business been affected because of these commercial pressures? And to what extent have you seen commodity price rises and supply chain disruption affecting your business?
Sure, Vinay. So, in our case as well, the year has been a mixed basket of a sort. there have been a couple of welcome changes, and there have been some pain points, as my industry colleagues have already touched upon. The welcome or the bright spot were that our global manufacturing facility, which was operating in India. So so in this year, we really shipped to many global locations, right from Chile to EU to Middle East. As we speak, we are deploying some of the robots with one of the tier one global IPP in Dubai. And we are really gone all in for Make in India. So all the robots globally are made in India. Additionally, we are ramping up significantly our R&D facilities in India. So when we started off, everything was in Israel. Then we shifted Center of Excellence of Engineering to India, so on and so forth. So right now, almost all functional heads, right from head of global analytics, head of global maintenance, head of global deployments, and now R&D as well, we are building up in India. So that has been one thing which we're focusing on. Second change that we have seen, because there was a lot of commercial pressures on greenfield, and these were not really going through, as Shiv and Shilpa just touched upon. So the asset management suddenly took a center stage in IPPs, and to our surprise, for example, last year, out of every 100 proposals I would have submitted, 95 were greenfield, whereas this year the brownfield is almost 40%. We have 60 gigawatt plus operating solar projects. So and lot of people in asset management had time and energy because greenfield projects were getting delayed. So brownfield and extracting every bit from brownfield took a center stage. So we are seeing lot of projects being done with retrofitting and with robotics to enhance the productivity of the project. Third theme that I have seen is CNI is now truly taking center stage. So initially we were talking that CNI will eventually pick up. The way it is picking steam, it appears probably in 3 to 4 years, CNI would be at par with utilities in terms of installation we are seeing. We are already in touch with a couple of players who are exclusively focused on CNI segment, and we are seeing that they're talking with us in terms of gigawatts. Every year they are planning to do a couple of gigawatts, which is a very, very welcome news, which correlates well with the graph for open access that you had just shown. And finally, coming to commercial pressures, we are seeing a lot of delays in the project owing to module availability, so on and so forth, owing to supply chain disruption. We have projects wherein commissioning timeline was April this year. We manufactured the robots, but because of module challenges, we are still awaiting the projects to go up and running. So it clearly is painful both for the client and for us. And what we are trying to do is we are trying to be as much flexible with the clients. Basically, we are a partner, so we are trying to give them as much flexibility as possible. And in turn, what we have seen, IPPs are also reciprocating the same. So because there is a lot of delay in the project, for greenfield projects, IPPs are now open to increase the lead time. What that does is it helps me reduce the overall cost, because instead of express shipment, I can go with a shipment which is more economical, so on and so forth. And finally, the point that you touched upon, supply chain disruption. We did see a lot of disruption in 2021. After that, since we had our IPO in November 2020, we had raised well over $100 million in that year. So what we did was, on long lead items, we kept sufficient stock so that we can service our clients. So that is how we went about it. And second thing we did was we gave client a plethora of option, that a price point A is with a lead time X, price point B is with a longer lead time, which is X plus delta, and most of the clients were happy to take that kind of arrangement. So that came out to be a win-win solution for us. So that's how it has been so far.
All right, thanks, Nalin. So, a question for both Shiv and for Shilpa. We've seen, the market has always historically been very, very buoyant. There's been a lot of new capital in the industry, aggressive bidding, and there was always very favorable assumptions built into financial models. How has the experience of last 2 years changed the industry? Do you see more bid discipline? I mean, we have seen tariffs go up by about 20 to 30 paisa, but is that enough? What other kinds of trends do you see to basically learn from the recent cost pressures in terms of whether it is project design, whether it is bidding or O&M, etc., etc.? Shiv, why don't you go first, and then I'll ask Shilpa the same question.
Yeah, I think currently all the trends that are there, right from commodity to the exchange rate to the interest rate and everything else, I don't think, given the way all these aspects are existing and are likely to continue, that we expect in the near future, the kind of tariffs that was seen previously, I don't think those are possible in the given conditions. I think, in fact, some of the recent bids also do indicate there is an increased tariff levels and things like that. Also, adding to this aspect is there has been a consideration, at least on the wind side, by the ministry to eliminate the reverse auction process and bring in the two-part bidding, which is essentially a tariff quoted and by bucket filling method, the projects are awarded. So similarly, there is now a request from the solar power developers also to bring in the same element into the solar bidding too. Also, going forward, we expect the market to move towards more of hybrid projects and more of round-the-clock projects, because standalone solar and wind are not likely to help the cause. So if we have to move towards the net zero targets or the energy transition goals, it's important that 24/7 clean energy solutions have got to take priority. So there's going to be a shift in the market. So I would see less of standalone solar or standalone winds going forward, more of hybrid and more of round the clock with integrated storage solutions or certain committed PLFs and certain committed peak time, commitment of delivery of energy, those kind of bids to come in. So going forward with these kind of a market shift, obviously new benchmarks in terms of tariffs are going to be established, and accordingly, we would see, hopefully looking forward to seeing a stable bidding environment, and the kind of aggression we saw should not be there. I guess that's what we expect given all the things that are happening around. So hopefully it should be a stable environment, and also with the support of government on some stable regulatory policies that should help in terms of kickstarting the growth again.
And Shiv, do you feel that the tariffs have moved sufficiently upwards, or is there still room to go?
No, they are moved upwards. So a lot depends on how rest of the aspects also play out.
Right.
One of the important element that we also need to, just going out of the topic that we are discussing, is an element on the transmission and the substations, and also the grid stability. So these three aspects are actually critical, and these three aspects needs to be addressed prior to even the large RE capacities coming up, because currently we see a lot of planning on the substations, but at the same time, a lot of projects which are there in the backlog, once they are awarded, there's going to be a delay for the substation to come, and automatically the projects are going to be delayed. So it's important that the planning of transmission capacity and the substation has got to be ahead of the RE capacities coming up in especially in all the 5, 6, 7 RE rich states. So that's an important element. And the third thing, is actually getting the grid stability. If you're not able to get the grid, addressing the grid stability with storage capacity, one of the things that we have recommended from the industry to the ministry is to look at planning certain storage capacity at the substation levels to be able to balance. So this will actually help in terms of pumping in more RE capacity, because as we see now, more solar and more wind going in, those have, their own peaking hours, and I don't think grids are, can absorb them with the type of capacities that are coming up. So that's something which is necessary for really the capacity to get added in the future, apart from the commercial considerations and the financial considerations.
Yeah. Thanks, Shiv. Could I ask the same question to you, Shilpa? What is the kind of bid discipline which is coming in the industry? Both, what do you see at the project developer end as well as the EPC end? And like what Nalin mentioned, a lot of cost optimization and innovation going on. Maybe if you can just touch upon a couple of those things.
Sure. So, yeah, I mean, to begin with, I would agree with Mr. Nimbarkar that there is a certain discipline that is setting in. At least the previous price considerations, which were mostly viable only on Excel, is I mean, there is a very serious intent that can be seen in the recent responsible bidding, I would say. So definitely the trend is for a more efficient costing, efficient predictive pricing, all of that. While I say that, I would also say that this trend further needs to improve upon in terms of consideration of the availability of land, of the availability of the evacuation. And I say that because what we see is that while the projects get signed, the PPAs get signed, um, it is there are invariably project delays because of the land availability or because of the supply of modules. So while the trends are improving, these are aspects which are the traditional aspects, not something new that the industry is grappling with, but can be further tightened up. And coming to the point of what we see going forward, I think yes, I was earlier talking about some different kind of packaging, and yeah, so that mostly is coming as a demand to us from the C&I developers as well as the um, uh, the industry, the direct industry who wants us to build RTC or a higher PLF projects for them. So this is something that we are seeing new. We are looking at that with a little I would say apprehension, because earlier also wind had taken off, and then for the numerous reasons that we are aware, there was a slight stoppage, I would say, in terms of the building capacities of the wind capabilities. So we are looking at it with a little a slight cautious approach, but definitely RTC and hybrid should be the emerging trend in terms of the overall RE addition. And what we also see is that the PSUs especially are working with very intense mandates on building RTC capabilities. Uh, at least the hybrid for sure will see a good number of PSU bids coming out with hybrid, and that is where we feel that the trends would be shifting towards the C&I and the PSUs together driving it, and the private IPPs, of course, following it, would be the market that we see going forward.
Yeah. Thanks, Shilpa. A question for, I guess, most panelists. We have been talking about the shift to the RTC market and the hybrid market for the last couple of years. We can see that it is beginning to happen with greater speed now. But the wind sector itself is also going through massive changes. We know that the wind turbine suppliers have faced a lot of financial trouble. Costs have gone up. In fact, the business model almost has been kind of changed, where nobody is offering integrated EPC services anymore. And it's more about somebody providing a turbine, somebody else doing transportation, somebody is doing commissioning, etc. How is that affecting the whole wind sector as well as the whole RTC business? Again, I'll come back to you, Shiv, and to Shilpa as well. How does the whole shift to RTC and this peak power tenders, etc., play out in the context of developments in the wind space? And again, the lack of storage capacity in India.
Yeah, so on the wind, as you rightly mentioned, the wind manufacturing industry has had its own issues over a period of time, especially I think the industry was not able to shift gears with the competitive bidding environment, and accordingly there was a slowdown. And earlier, because of the feed-in tariff, the solutions offered by them were turnkey, and that's how the industry grew. But with intense competition and tariffs going down, I don't think that model was then viable. So accordingly, most of these manufacturers, as understood and as heard, have suffered losses and all those things. So all the manufacturers, or most of the manufacturers today, have moved to a model of supplies only. And I think the newer models that we look in terms of the turbine is more around blades and nacelles coming out, and the towers, the logistics, erection, and all being in the developer scope. So essentially, that kind of shift of division of work and responsibility hopefully will find the right to be able to, developer takes certain risks, but at the same time, the cost levels are going to be at a level where the whole packaging can work and make sense, with also the tariffs firming up. And with all this, I expect hybrids and RTC to pick up. But on the RTC side, the important element actually is around the storage. There are two types of storage which are currently there. One is the pumped storage and other is the battery storage. The cost for the battery storage is still at a level which was quite prohibitive. I'm not too sure whether distribution companies, or for that matter, others should actually be able to, afford the tariffs there. And also a lot would depend on how the exchange market develops for the RTC solutions, because when you size between for any requirement, you have to always size solar and wind excess. So the excess energy has to be sold over the exchange. So how we see the exchange demand going forward will also play a key role in terms of how the RTC power tariffs and the growth of that would continue to prevail. We hope the battery costs come down and more pump storage projects are promoted by MNRE or states. That should really help in terms of bringing in a competitive storage solution to be able to arrive at reasonable tariffs on the round the clock.
Sure. And Shilpa, how is your business model being adjusted with all this shift towards RTC, etc.? Have you had to kind of build on new capabilities, face new challenges as part of that process?
Vinay, as the EPC company that we are, we already offer RTC solutions. We've in fact we offer these solutions globally. So but mostly it has been focused on storage so far, and we have the capability for assisting the overall pricing for a bid, or even we have a tie-up with the battery manufacturers. So we have been deeply involved in the storage space. We've executed a couple of projects globally. And in terms of wind, we are of course building capabilities. We would like to assess the market and find a place where the whole model of the wind industry is shifting. I would say they are right now reinventing themselves in terms of how the business proposition works out for the manufacturer, for the EPC players, and for the smaller stakeholders there. So the whole model is getting restructured, and we hope to play and get a pie of that, a share of that pie, where we could also take on a part of the whole value chain. But what we see there as a challenge is in terms of the risk absorbing capabilities. So like we talked about it earlier, that when tariffs are now at least out of the competitive regime, the developers now need to look at it with a different perspective, because though they have the freedom of a more getting better tariff numbers, but also how the risk would be apportioned to which player, and how does it eventually bundle up, that would remain to be seen. That's where the interesting developments are expected.
Yeah, thanks, Shilpa. Just changing track a little bit, Nalin mentioned this very interesting theme of developers focusing on, optimizing their assets, operational assets, asset management, etc. While there are so many other challenges on the new cost or new assets or construction of new projects. What are the interesting developments there? And I think Nalin mentioned that there are a lot of retrofitting going on in terms of existing projects. Nalin, maybe you can just touch upon that. What kind of initiatives are you seeing, not just in terms of robotic cleaning, but what other initiatives are being planned by developers, and how what kind of challenges are existing assets facing? Again, the point is, I think we have about a good 100 gigawatt plus of solar and wind assets. These assets are also aging, and there are some concerns about asset quality. So what are the opportunities there to optimize that and improve on that aspect?
Sure, Vinay. So basically, three trends I'm seeing. One thing that I'm seeing is, instead of breakdown maintenance, now people are really focusing on predictive maintenance, not preventive, but predictive maintenance. So they're using a lot of digitalization and automation tools. For example, when they are buying robotic cleaning, they're not only asking for a robot which can do cleaning. They are asking for features wherein, say, the robot can scan and give them inputs about hotspot, give them inputs when a module mounting structure is going to fail, because the robot is moving over all the rows. They can detect if there is any deflection in the rows. They are asking of inputs wherein we can predict when a particular tracker is going to fail. Again, with the trackers, what happens is, for the whole tracker, you have, if this is a complete tracker table, you have just tilt sensor only at the center. You're not checking tilt at the edges. Whereas with robots such as Ecoppia T4, we are able to check tilt angle at top, at center, at bottom. And if we see tilt at center is 5 degree, at bottom it is 7 degree, then we can basically give inputs that this particular table is going to fail, and then you can prevent that loss from happening. Similarly, people are now focusing a lot on other aspects which can be automated. For example, security of the plant. So if you look at it, unfortunately in India, majority of the plants are manually guarded. We have physical security guards present. So there are technologies which have been used in Middle East, in Europe, wherein you don't require physical presence. So it's a mix of vicinity sensors, a drone which basically comes in, and then they are also using a combination of sonar and other technologies, which so when something or someone comes in vicinity of the boundary of the plant, they are able to identify whether it's an animal or a person. Accordingly, the action is taken. So that is also something which has been explored a lot. One more theme that I've been seeing that a lot of our clients are working on is grass cutting. Similar to dry cleaning of solar panel, grass cutting also is constituting significant amount in overall O&M of the plant, and people are really looking forward to automate it, wherein it becomes more cost effective. So automation, mainly people are looking to improve ROI. They are not looking at to demonstrate that we are using new technologies. Everything needs to basically, if you're putting in $1, it needs to give you a return which is more than $1. And finally, one more thing that people have started focusing on. In fact, we just heard the news wherein Reliance had bought a majority stake in Sensok, is digital construction management. So in addition to ensuring that current assets, you are sweating them to the full, people are now understanding that it's how you build the asset that defines how high or low maintenance of the asset would be. So digital construction management, what you effectively do is you geotag each and every asset, so that when you are placing or installing the asset, if it is not done as per the drawings, right now in India we have something called as built, and then there is actual design. There is always a significant variation between the same. So with geotagging, what happens is if it is not as per the drawing and you put say an inverter or any cable which is not as per the drawing, immediately you get a red flag. So it's basically quality management on real-time basis. So this also, I think, will become a key theme over next 2-3 years, because tariffs, fortunately or unfortunately, once things normalize, will again start to slide. We are also talking about green hydrogen being very, very competitive and touching $1, $2, so on and so forth. For all these things, the key raw material is again renewables. So I think digital construction management will also take a precedence, and it can easily help us save anywhere between 8 to 10% in cost, wherein you don't have any cost overrun, you don't have in terms of wrong installation or increased timeline, so on and so forth.
Shiv, has slowdown on the project execution front given you more time and mental space to the teams to focus on O&M and asset management? Any new developments, positives over there?
Okay, essentially, as Nalin mentioned, one is around the solar panel cleaning, and that's one area that is there. The other thing is actually trying to see how do we actually improve the other areas of the plant in terms of the faults typically that happen in the plant, whether it is the string fault or the inverter faults or the cable faults. So those are the areas where I think the teams are actually working towards being able to eliminate those kind of availability issues. Then the other work that is really happening is around analytics to be able to really get down to the lowest possible level in terms of the strings or in terms of the module and everything else, to see how best we can continue to monitor and be able to pinpoint if there is any shortfall in the generation from the expected level. The other aspects which I think probably we will try and contemplate to do is to have drones running to be able to scan the modules on a regular basis, to be able to check the health of the plant, especially the modules and stuff like that, to see what can be done and to improve upon that. Because this business essentially is about every day you get a pot of resource from morning to evening as far as solar is concerned. So it's up to the plant, the way it is designed and operated, how much can you actually extract out of it. And the thing that you don't extract from the resource is actually gone waste. so day is gone. So that's the way, we are trying to look at this business. And so there is a huge, work in terms of to be done. So we've set up our own analytics teams and other stuff here in Bangalore. There's a complete control room set up where people work, and there's a lot of work happening around that. So I think there should be a lot of improvements coming up, both in terms of on all areas of the plants there, to be able to continually improve. This is on the solar side. So similarly on the wind side, there are areas that can improve along with the OEMs there, by using LiDAR to check the profiles and to make sure the optimum positioning of the nacelle to be able to manage that, and also controlling the whole wind turbine controls. So there are other areas that are there, and especially also on the blades are improving now. People are now trying to assess how much of soiling is there on the blades, which is actually leading to the losses, to be able to ensure either go for a coating so that there's no soiling on the blades, to be able to extract maximum. So one is capex and second is the opex, because these assets got to run for the next 25, 30 years. So this has to be a continual improvement work. And I think as the industry is maturing and also new solutions hopefully will keep coming in, will help us to try and maximize the energy yields from the assets. So that's part and parcel of this business.
Sure. Thanks, Shil. Let's turn towards the future, particularly 2023. What is so one school of thought is that we had lots of modules in this year, so we saw record capacity addition. But next year, that will runs out. So next year could be a really slow year. Any other thoughts on top of that? I open that to all the panelists. I mean, how do you expect 2023 to play out in terms of capacity addition or any other major market trends? And I'll come to storage and hydrogen a little later after that. Shilpa, what is your perspective?
So what we believe is that unless the module puzzle is solved, we are not really very upbeat about the capacity addition that is expected in this year. So I mean in 23, it is basically a mix of module availability as well as the earlier bids which were auctioned almost drying out, and then no new bids or very less number of new bids coming up. So a combined effect of all of this is what we will get to see in 23, and we are seeing mostly maybe a part of this year's capacity, but if we touch this year's capacity, it would be a great thing.
Okay, good. Nalin, what are you seeing on your order pipeline and execution over the next, let's say, 9 to 12 months?
Pretty much in line with what Shilpa just spoke. In India, we are seeing primarily CNI segment, which is picking up, and in utility scale, I'm seeing people are trying to delay it as much as possible. Even in case of GIB as well, a couple of IPP shared that the perspective was not to really push it because it is giving them extra time for module prices to cool off. But globally, we are seeing that there is a lot of action which is happening in places such as Australia, where there is a single location project of 54 gigawatt peak, which is coming up, a single location project of 18 gigawatt peak, which is coming up. Surprisingly, we are seeing a lot of action in Uzbekistan, where there are more than 3 gigawatt of projects which are going to come live next year. But in India, I agree with Shilpa, unless module puzzle is solved, there is very little that we can achieve as an industry.
Okay. Pradeep, what is the outlook in terms of module prices, which is always a very hot topic in India, but also, what is the kind of shift that you're seeing, the acceleration towards N-type? Also, there's a question for you from one of the audience that could the FTA, the free trade agreement with Southeast Asian countries, offer a little respite for module supplies into India at a concessional duty rate or no duty rate?
Okay, so let me answer the question first. I think it's again a big black box. I think everyone is trying to explore and see if that is a possible option, and we are trying to do. We have applied for BA, it is approved. We have got the BA certificate. So the first trial order has been getting manufactured right now in Vietnam. So because we do have multiple factories in Asian countries as well. When it comes to modules, we have it in Vietnam. When it comes to cells, we have in Malaysia and Vietnam. So the initial BOM, what we have applied for BS, comes out to be from Malaysian cells. So technically, the calculations, we are okay to meet the 35% of localization requirement. But again, we need to see how the customs will react, because they may do their own interpretations and there might be some challenges in the initial days to give more clarification and more documentation is done. But technically, what we feel is FTA route should be open, because it's not just about the geopolitical issue between India and China. It's more about the business relationship between India and Vietnam as well, or the Asian countries. I don't think there should be a kind of sudden stoppage or anything which might happen for FTA route. But again, as time flies, probably there might be some new challenges or there might be some change in policies with respect to FTA route. So for the next 1 year, I believe that should be a kind of a option which is feasible. But again, it comes to a place wherein the cost of production in Asian countries is still higher as compared to China. So whether that is feasible for already bid aggressive projects or not, or whether that will be suitable for only for a few C&I projects which has better tariffs, that's a big question which I think the developers or the investors has to decide.
But sorry to interrupt you, Pradeep. You would also have the issue of ALMM from importing those countries.
Yes, that's the topic. So for the projects which are not bound with ALMM, I think right now we have a clarity that we can try to do it. But with ALMM, I believe again that's a challenge. So that's about the answer for the question. Now, coming to your question on the module prices, I think what has happened in the past 1 or 2 years is I think the global demand has been increasing too much. Now, the module price is again dependent on few important raw materials. Initially, there was fluctuations in glass prices because of the glass capacity, but then that got settled. But then the longer run took place where the silicon prices started increasing, and we have seen that it's constantly hitting at a higher note. A simple answer is it's not about the module capacity. I think most of our industry friends, even my competitors, have good amount of capacities, but the capacity is limited when it comes to polysilicon. So that is not increasing at a pace which it was expected to increase, because everyone felt, even the module being a module manufacturer, we expected that the prices would settle by say mid of 2022, which didn't happen because the global business again ramped up too much. Because we had seen there were some issues with US, so the demand was going down. We never anticipated the war between US and, the Russia and Ukraine, which again boosted the demand from the European sector. Too much of a demand last year, we could clearly see. So there's been a lot of increase in capacities because of the demand, because of various factors from countries, the European countries or even Latin America, or maybe a few specific projects in Australia, like you mentioned. So the global demand is increasing. And even if you touch upon the anticipated numbers of China for 2023, it is almost like 150 gigawatt of projects which they're planning to do. Now that means the demand will further increase. Technically, if you ask me, even in Q2 of this year, most of the module manufacturers are already facing constraints of capacity, because we know that there is a huge demand from China itself. So why will the price come down? That's point number one. But again, the anticipation is that the silicon capacity will pick up. So slowly we can see that there will be some betterment which will happen towards the second half of this year. technically from Q3 and Q4 of this year. And in 2023, I think it should, 2024, it should recover further because supply chain will get stable, a little bit more stable. And if you're asking about the technology, yes, LONGi has been investing a lot in terms of R&D because that is our bread and butter, which gives us good products every year, or I can tell every now and then whenever we need it. We invested almost like 0.7 US billion dollars last year, and if you see the investment in R&D in first half of this year for LONGi was almost 0.5 US billion dollar, more than that in fact, which means we have been investing a lot in terms of all possible technologies. We have uh, taken over the market initially from the poly module to mono module because we have been doing this research from quite a long time. After mono module, it was a time for us to educate everyone and probably even push more of bifacial. And we can see that the globally, like everyone is shifting towards bifacial now. It's almost shifted, in fact, even in India. Now, there comes a big question like why you're still in P-type and why you're not promoting N-type yet. So there are multiple factors. Like every technology is good until and unless there comes a question of stability in terms of supply chain, stability in terms of a product. So LONGi always tries to go for a mass production only when we feel that the supply chain is stable, only when we feel that the product is stable. So right now we are still with the P-type. I think recently we have also launched the HIMO 6 version, which is the back contact version of the P-type technology for the global market, but again restricted to few technology, few segments like C&I and residential, majorly in countries like Australia, Japan, or even European countries where the residential segment is booming. But we are still working on a few technologies, even N-type as well. In fact, we were the first one to again release it during SNEC of last year itself, but then we have not rolled it out for mass production because we have seen there are a few challenges when it comes to the supply chain. So we are working in all possible technologies. On a short run, I think we will still remain with the P-type technology, but with a probably refined product with better efficiencies, better degradation performance, and several other factors. But in the long run, I believe it's either N-type or most probably HJT, which will come, say, in down 1.5 to 2 years down the line. So there's been a lot of progress which is happening. At the same time, LONGi is also diversifying towards other fields like hydrogen as well, because that we see as will have a good future across the globe.
Yeah. I know, Pradeep, that many developers are almost counting on module prices coming down to about 20 cents by the end of next year. Do you think that is realistic?
So let me tell you, I think if you ask me what is a respectable number for any module manufacturer or any module, to be specific with the latest technology, I think it should be somewhere between 21.5 to 22.5. And I tell you, it will remain in that levels because by the time you start optimizing it further, by the time your supply chain gets stable, the technology will change, and then again the price level will go high because of various constraints. So what we feel is the kind of numbers what we had by the initial days of 2020, like 17, 18 cents. That's a very far off kind of a vision, which I don't think it's possible because of the increasing global demand. 20 is also a very aggressive number. At least till end of this year, I don't see that number at all. We have a very good expertise in terms of supply chain, being one of the most integrated companies. I think we can foresee almost accurate prices up to some extent. I don't tell that it's an accurate number, but 20 seems to be a very far off number.
But you are saying 22.5 is a likely number. That is a number you think is
That's a number we can we can see probably in second half of this year.
Sure. Okay. I think it is impossible to have a meeting on or any discussion on renewables without speaking about hydrogen. It seems to be everybody's favorite word. But the fact is, we haven't really seen anything concrete come out of on the policy front. So how real is that opportunity? How far is it? Is any concrete work really happening on that front? Again, Shiv, I'll come to you first and then followed by Shilpa.
Yeah, here I guess there's a lot of buzz around green hydrogen, But I think there are too many elements to actually be looked into and fixed before we can see anything meaningful picking up in this area. Because number one is, if you have to produce green hydrogen, you need RE power. Okay, so the quantum of RE power required is massive, massive, and that's number one. That just on the power side of the producing green hydrogen. Now coming to the production of hydrogen itself, and putting an electrolyzer and producing is probably the easiest part of doing it, but managing the storage and the transport are the other biggest challenges. And all put together as a package, as a cost, I'm not too sure the price at which we can currently produce. I'm not too sure unless and until there is a viability gap funding or there is a mandated use for green hydrogen, there would be buyers available for that. So a couple of things have got to happen. One is if you are trying to look the hydrogen production to pick up, essentially the hydrogen production facility necessarily will have to come up. If it is for domestic consumption, it will have to come up at a point where the consumption is going to be there, because storage and handling costs are enormous, and it's not something which. And if you're trying to look for exports, then I think the first thing that has to be done is to develop the ports to be able to have the required infrastructure to get this into the play. So given all these aspects, I'm not too sure whether this is something that can, pick up in the immediate future. My guess is not really. But I think investments are being considered, people are making announcements and things like that. If at all it picks up, it might pick up more for export purposes rather than for domestic consumption purpose. And also there is an opportunity cost today because of the prevailing oil prices and gas prices that are there, which is actually supporting that. So whether on a long-term basis, if we see softening of the gas prices, whether hydrogen would continue to be viable because once invested, it is the capex which matters thereafter, the production cost. It's not that you can then sell it at a lower cost. So a lot of issues are around this. So I think we as a company are also trying to do a small pilot ourselves to get a hang of the technology and to get our people trained and everything else. As and when the market opens, we are there. But I think it's not something that can happen in the immediate future. But like everyone else, we are also there, and everyone else is trying to look at these things and be engaged. And if things develop and if they get competitive and if there is an innovation in terms of being able to compress at a lower cost and transport at a lower cost the hydrogen, probably those could be the game changers. So we're just waiting for those things.
Thanks, Shilpa. Shilpa, everybody says India will be the hydrogen hub of the world. I mean, are you seeing any concrete discussions with maybe Indian clients or even overseas clients?
So yes, it's a race and everybody wants to be part of it. So definitely there are a lot of announcements that are that we are all witnessing, and I would love to believe that the intent backed by proper funding arrangement is also part of the plan. So I think that it is definitely clean hydrogen is expected to play a very critical role in decarbonizing, especially sectors such as heavy industries and then the long haul transports. But there are significant challenges that are not yet resolved, and what we need to understand is that the hydrogen value chain is a very complex and also a very capital intensive value chain, and there are segments within that value chain which still remain to be decoded, especially if we look at India. So yes, the hydrocarbon rich countries have shown us the way by, all the blue and the gray hydrogen being harnessed, and a proper outcome of it is also being seen. But when we come to India, I think we still have parts of the value chain segments which need to be understood deeply. And rightly, like Mr. Nimbarkar said, everybody would, or rather should, first try to find out by doing a pilot themselves and what it entails. So materializing the hydrogen promise, I would say, is we would say the hydrogen talk or discussion is in the very nascent stage, as how solar was prior to the national solar mission. So that's the stage we are in. And while there are commitments being made which are fabulous to see, it would also mean resolving all of the existing issues of renewable energy so that we have additional capacity for green hydrogen as well as the hydrogen value chain itself.
Correct. Thanks, Shilpa. Just last question from me before we go to Q&A. And this is for you, Shiv. I think I've always felt that one of the success stories of the Indian renewable sector has been, the way the country has been able to attract capital. All the world's leading investors, whether it is oil and gas companies, sovereign wealth funds, pension funds, etc., have been attracted by big targets, supportive government policy, etc. But now, with a little bit of negativity over the last 1 year, maybe continuing into next year, plus other countries now coming out with very strong favorable policies, whether it is US, Canada, Australia, Europe, etc. Is there a risk that we might turn off some of this capital flows into the country? International capital might say that actually, I find better opportunities in Middle East or Europe or US, etc. And hence capital might actually become more expensive for the Indian renewable sector.
I don't see that to be an issue because, see, one of the basic on a macro level is how is the liquidity around the world. As long as there is sufficient liquidity, India will continue to be, as one of the top investment destination. Because couple of things, which support that. One is, though we have certain policy regulatory challenges and things like that, I'm sure all markets have their own, challenges. But the size of opportunity and the scale at which one could deploy capital is massive in this country compared to any other country that you could look at. And especially with the government leading and committing itself to, the carbon reduction targets and everything else. So there's a massive effort from the government. And a lot of actions that have been currently taken by the government. In this call today, we discussed, but we didn't really focus on the efforts that the government has done towards, improving the environment and making sure investors find India as an attractive destination. See, one of the historical problems that the sector faced was around receivables. So today, MOP issued the LPS circular, the notification, and that has at least brought in certain amount of discipline. And the biggest thing also to look at is now MOP is pushing for the Electricity Act amendment, which should actually bring in the next set of reforms that are much needed to essentially, I think, to make sure that the distribution companies become standalone financially sustainable entities. So the steps that are being taken are really, what will make the whole sector credible. And I think all the people who have currently invested, I think end of the day, all of them have made successful investment and successful exits here. So there is a story behind to all these investments that have happened, and it will continue to be there. And there's a lot of pension funds that is still not come into India, especially from US. Nothing has come from US so far. All we have seen is coming from Canada. So there's a lot of pension fund available, and there's a lot of other capital that is available. So I think a little more of regulation and policy stability and some more clarity from the government, I'm sure India will continue to be, a major attraction for investment. And the only scenario in which probably the investments could become difficult is overall liquidity situation in the world, gets to that situation, overall liquidity becomes grim. Then what happens is that most of the funds would like to keep certain reserves for their situations of, having to return the funds. In such case, there would be a crisis. And in such case, there will be a scarcity of the capital. And I'm sure not just India, whole of the other markets which are attractive will also get impacted. But given the way things are moving as of now, with US, looking to stabilize, and we're not seeing major hikes there, we're sure that capital will continue to flow into this country.
Sure. And just very quickly, is the debt appetite in India, does that continue to be strong, or is there any concern on that?
No, I don't see any concerns on that. I think that there's a lot of debt available here, and I think with things getting better, with some of these things, getting addressed, I'm sure it will continue to remain strong here.
Okay, all right, thanks, Shiv. So there is a question about RTC power, particularly blended with storage. What is the level of LCOE for a fairly even supply, flat PLF throughout the day? And is that competitive with thermal power right now? Because I think one of the concerns is that we've seen demand for thermal power pick up today. NTPC and NLC and some of the other PSUs are signing up new thermal power projects. And for various reasons, storage, obviously it's expensive, and RTC power is still probably not getting as much traction as we would like. Any particular reasons for that? Shilpa, any insights? Shilpa, are you there? I think probably we've lost Shilpa. Anybody else who's willing to take on Shiv? Any quick reply on cost attractiveness of RTC power?
I think it is yet to come out. I think we'll let the market, discover that. Though of course, government is trying to make an effort in terms of blending thermal with the RE to be able to, balance the grids. I think there is also a proposal to utilize the additional capacity on the thermal to act as storage to the RE concentrated areas. But in terms of discovery of RTC, I think we will have to wait for a few more bids to really comment on what levels it would come to, because there's not much at the moment. So I think we'll have to wait. So, but on a general broader perspective, I don't think, because the thermal power is also varying, because if you look at old depreciated plants, the cost of production for them is very low. But there are, other plants where the cost is high, especially again, now if you were to add the additional cost of FGD and NOx and everything else, and if they are able to get them as a pass-through, even the thermal costs are going to go up. So I think we just need to wait to see how all these things stabilize before trying to put a finger on what the RTC tariff would be.
Sure. Shilpa, I don't know whether you got the question or not. I'm not sure what point we lost you. But the question was about cost attractiveness of RTC power in comparison to thermal power.
In comparison to thermal power, okay. So I think the costing would depend upon the component of the storage that becomes part of it. The solar plus wind hybrid is reasonably straightforward tariff calculation, but when we look at adding the storage, if we are looking at a small it entirely revolves around minimizing the storage to make it competitive with with respect to thermal. But the larger the storage component, the further away you move from your thermal tariffs. So just to give an example for uh, a solar plus wind hybrid, somewhere in the range of 3.5 to 4 rupees is the cost that is coming out as a kind of a lower side benchmark. Could be higher, and then if I add storage for the the improvement of the PLF for depending upon the hours of storage that are required, this cost will then start moving upwards.
Sure. Thanks, Shilpa. Very last question for Pradeep. This is from the audience. Any plans to manufacture in India, either directly or through a tolling arrangement or any other arrangement?
Okay, so let me be very clear in this. Probably, if it is a tolling option, then we are very clear no from the beginning, because we always look at a business on a very long-term perspective, and for a long term, I don't believe we can rely on the partners, may it be in China, may it be in India. So we would like to do it by ourselves. So a tolling option for a short-term kind of a business is a definite no. But coming to manufacturing, I think that's a question which has not been answered of. We have an intent for manufacturing in India, not just in India, probably in other parts of the globe as well. But till March, till the BCD was imposed, I think there was a question like, why do we have to actually put up a factory in India? Because importing from China was always better in terms of pricing, better in terms of supply chain stability, and various factors. But now, after that, I think because of the geopolitical issues, there has been a few challenges when it comes to FDI approvals, or even probably getting the approvals for setting up the factories here. We are working closely on all these things, but till we have a very clear go-ahead from the government, because we might not set up. But we already have a hope. I mean, we have people, dedicated people in our Indian team itself working for this. We have been trying to discuss with all possible government authorities, trying to seek more clarity. But I believe since recently, I think the geopolitical issues have slightly better as compared to last year. Probably down the line, if we get an opportunity, we are very keen to set up here.
Okay. Okay. Sorry, I'm just going to squeeze in one last question. This is for Nalin. Nalin, the question is, with the reduction in cost of robots, has the ROI or the payback period for robots come down? And what is the smallest scale installation for which you've installed robots in India?
The ROI has significantly improved. So it has happened because of 5-6 reasons. First thing is the coverage area of the robot. So in 2020, the typical coverage area or the length that robots were covering was close to 500 meters. Now we are seeing robots which are easily doing 2 kilometers, 2.5 kilometers. In fact, there is a 800 megawatt project which we are discussing. The shortest row is 1.2 kilometers. So the ratio is less than 1 robot per megawatt peak. And if we compare it to, let's say, 2020, the ratio typically used to be around 2.5 robots per megawatt peak. So there is a significant reduction in ratio of robot. Second thing which has happened is modules wattage has improved significantly. So in 2020, it was 300, 400 watt peak modules. Now it is closer to 600 watt peak module. So for the same coverage area, we are able to serve almost 50% more watt peak. So that again improves the overall profitability of the project, because number of robots required is less per megawatt peak. So that is second aspect. Third aspect is maneuverability. So the latest robots that we have come up with, they can basically accommodate as much as 27 degree of 27 degree of misalignment. The initial set of robots that we shipped out way back in 2017-18 were able to accommodate close to 4.5 degree of misalignment. So what this does is it gives developers, so developers can give EPC much more margins. So if you relax margin, the cost of construction accordingly reduces. So that also has helped significantly. Coming to second part of it, so the smallest project that we had done was a 4 megawatt project, which was with the NTPC. This was when we were entering. Typically, what we have seen is the project size need to be at least 25-30 megawatt peak, because there is a fixed cost involved as well. You need to put up a weather station and certain other things irrespective of the size of the project. For example, at least one maintenance engineer would be posted. So any project which is more than 25 megawatt peak should make economic sense to go ahead with the robotics.
Okay, all right. Thanks, Nalin. So on that note, because we're running out of time, we will end here. So thanks a lot to Shilpa, Pradeep, Nalin, and Shiv. Thank you so much for sparing your time. From my side, just to kind of sum up our discussion, of course, it was a very, very tough year. We do expect some of the pain to persist through the beginning of next year, but hopefully as more module capacity comes on stream in India and the costs come down, some of these transmission related challenges go away, things should be much brighter going forward. I think Shiv said that ultimately there is a very strong government support for the sector, and together with more, more private initiative, more innovation from the private sector, there should be things should look bright from there on now. So with that, thank you very much again, and I'll pass over to my colleague Neha. Neha, over to you.
Thank you, Vinay, and thank you, panelists, for sharing your insights. It was an extremely interesting session for all of us. I would like to thank our sponsors again, LONGi and Ecoppia, and our event partner, Indo-German Energy Forum. Finally, I would like to thank the audience. I hope this was an interesting session for all. We will be sharing the recording of today's session to your registered email account, and it will also be available online on our website. We will meet you next at our in-person conference on advanced clean energy technologies in January. Until then, it is goodbye from all of us. Thank you so much.